Good morning, everyone. How's everybody doing? Whoops. Make sure the YouTube link's in here. There we go. Hey, Ian, Tibby, Harris, Johnny, how's it going? Cisco, what's up? Badir, how are you? Everybody okay? Pretty slow night or morning. Welcome, everybody, to the tradingsyndicate.org, where we assist regular people and help them make money in this crazy business. Hey, Mr. Simpson, what's up? I don't know. I gotta say I'm short biased. Um, the only the only thing that's holding us up right now that I'm seeing, which is like blatant, is that bid at 12. There's a bid at 12 that was there yesterday and it's there tonight. Our low's 14. We just cannot get any lower than that. Now, what does that mean? You'll hear a lot of things in trading. You'll hear buyers and sellers fighting each other. Well, it's not actually like MMA. Hey Jerry, how you doing? Well, what happens is the sellers, you have to look at their cost basis, right? So, where's the cost basis before this move higher? Well, if you went and looked at the chart, the cost basis is all here, right? This is where time and volume equals cost basis of inventory, right? So everything's costed under 67.88 and it's being distributed now because we have a gap up. So when you have, there's your supply, there's your distribution, and if you have a short position here, well, all sellers have to do is just come down and you stop selling, right? Good stuff, Jerry. No problem. So really, all that happens, the mechanics of this are that if you were long inventory, right? So if you were a wholesaler and you had inventory here, and you were selling and selling and selling and selling and selling, right? When you got down here and you saw a ton of people lined up to buy, would you fill those orders or would you lift your order to see if they'll follow you higher? Well, smart business people lift the offer. That's the way this has been going for thousands of years, right? So when they lift the offer, that means they don't have to sell under 15 or 14 or 12 or wherever your low is, right? Hey, Jiraj, how you doing? So you really want to make sure that you get that right. Because when they shut off the sell, that creates buying. Most people think that there's a ton of like really big buyers that are pushing price higher. That's only when people get trapped short and they come in and they aggressively buy. Large size longs do not take the offer unless they're desperate or they have to. It's very, very rarely happens. When people are managing billions of dollars and hundreds of millions of dollars, they don't make hasty decisions. So they have a plan. They have an executing trader like me who tries to go and get them the best prices, that kind of thing. They don't come in and hit market buy. The only people who buy aggressively are trap shorts, right? That's a very, very common market thing that most people don't know because retail traders have never trapped a short. So how do they know what they trade like, right? It's like you saying, okay, I know tigers behave like this. Have you ever been around a tiger? No. But I saw, I saw a YouTube video, right? So I've been around sellers. I've been a seller myself. And I know when we see large bids, you pull the offer. So how this works, right? I'm going to go into a little bit of how markets work. It's a little slow right now, right? If you look at this 1 minute chart, there's nothing going on. There's no trade here. So here's how a market works. All right. Say you have a stock and it's $5, right? And the stock came down from 7, right? Everybody with me? We get to 5 and I see people, there's a million shares of bids at 450. So what does a trader do? So the stock was 7, it comes down to 5, right? And I have supply, right? My cost basis is maybe $1, right? It's quite a bit lower than where it's currently trading. At 450, I see a bid for 1 million shares. So what do I do? I'm a seller. Remember that. Anyone? Okay. This is how it works. Now it's done by electronics now, but the business is still the same. So if I see a bid for 4.5 million shares, I will go and put a bid for 500,000 shares at 5. Okay? So if the stock is 5 bid by 510 offer, right? You guys are all wrong. I'm going to tell you what's going on. It's okay. It was honestly a beautiful effort. So if I see a bid at 4.5 for 1 million shares, I go, I'm the seller, right? I put a buy order for 500,000 shares at 5.5. This guy will move his bid up if they're serious. They'll move their bid up. So what I'll do is I'll bid 5 for 500,000 shares, and if it's offered at 5, and maybe there's 5 offers there for maybe 500 or 1,000 shares each, I'll go and take all those 5 offers out, and then it'll be 5, say maybe 525 offered, and I'll take that bid and I'll move it up to 510. And then I'll be on the offer at 5.25. This guy will move his bid up, and then retail will see that because retail sees the DOM and goes, "Oh my God, there's a big buyer," right? So as soon as retail sees that, they'll be taking my 5.25 offered. Everything I buy at 5.10, I'm selling at a quarter. I'm moving the bid up. I'm pushing the price. That creates buying, and that's why you guys see feeding frenzies in stocks. It's a common market making thing. It's done by algos now. But you guys bet you didn't know that would happen. Why would you go to the bid if you're a seller? Because you want to force price higher so you can sell more into it. That's trading. That is real trading. You guys would have never thought of that. It's not something that's talked about. Exactly. Right? That's why when you see big, large bids on the DOM, you think that that's a big buyer. That person is trying to create buying interest, and he is probably the offer. You got to remember, when you're a trader, you're on the bid and the offer, right? You guys buy and go in one direction. These people are making markets, and they're both sides of your trade, right? Exactly. So when they get down here, they just stop selling and they show a few large bids and the market goes right back up. That's why when we break this 68.12, then we might be able to get something like looks like a gap fill. I'm short biased tonight because the reason I am short biased is because ever since I've been awake, I've seen that there's a constant seller. There's been a seller here at VWAP, and there has been sellers all night. There have been sellers under 26. But they stop selling magically when we get down to this 14 level. So right now we're just going back and forth between 16 and 23. Selling size without bidding is quite tricky. Exactly. There you go, right? See, what you want to do is you want to take your bid. See, you're the offer. Do you guys understand why I say watch the offer? Because I want you to be on the offer. Have you ever seen my Twitter page, vwaptrader1? It says location. Where's my location? It is on the offer, right? Why do I want to be on the offer? I'm going to take that big bid and I'm going to herd you guys and I'm going to push you like I'm herding cattle. And I'm going to herd you into my offer so you buy from me. Do you understand? This is how business works. There are other sellers out there, but I want you to buy from me, not some other schmuck, right? Right? Remember, folks, that's why my first lesson in my mentorship course is that trading is a business. If you don't understand how the business works, how do you expect to make any money in it? Just by trading a chart pattern. You see how ridiculous that is? To come up with an indicator or a pattern when you have absolutely zero idea how the business functions. Now do you understand why I'm preaching all the time about this stuff? Right? I've got to get like a couple of good-looking influencers, like a guy and a girl, to do the talking, and then maybe more people would listen. Right? I'll have to try that. Maybe I'll build an AI, two supermodels, a man and a woman, and have them talk up the room. Why not, eh? Make it sexy. But you guys, you know, you just have to know a little bit about the business. If you were going to sell tires and you didn't know anything about tires, it wouldn't make any sense. If you were going to open a restaurant and you didn't know how to cook, you understand, right? Hey, Cisco, what's up? Oh, man. I had a dream. I had a dream, Cisco. I was living in Diamond Head last night, right near KCC. Could you just, in that case, put a million on the bid and a million on the offer and let them figure it out? Mike, that's exactly the way they used to do it in the 80s and in the early 90s. I remember I remember when I was trading, one of these old market makers from Florida came up, and he had been in the business 30, 40 years, and I was a rookie. And he was looking at the way I trade, and he was like, because I was trading out a position, and I was on the bid for 500 shares. I was on the offer for a million. Of course, I wasn't showing it, right? And he's like, "Kid, what are you doing? Put a million on the bid and a million on offer, and let him bang away at it." I talked to my client, and my client goes, "That guy's old. He's nuts. Leave him alone." But I've tried it on other things, and it does work. But you got to really have your hand around the throat of the stock, Mike. If you're going to be, especially if you're showing size on the bid and offer, then you better have really good control of the inventory. Well, yeah, you can't do that when there's other people, right? You can only do that when you're a client or you have control of all of the supply, right? The other thing you guys don't realize is that you want to be the only seller. That's why people do their own deals. That's why they take companies public. So they're the only ones selling the stock. You want to buy ABC company, you got to come to me, bucko, and I will set the price according to how many buyers come in. But as soon as you do deals with partners, everybody else has stock. Yeah, right? So everybody's, competing to sell, right? And you never show your hand, right? You never do anything that is remotely close to the truth when you are trading size. Because if you tell the truth, you're going to get killed. You want to do deals? We'll talk. No, just pick up the phone and start dialing. I need a seriously technical guy on the team, so we'll talk, Mikey. We'll talk. So that's it. Now look at this chart. Now, after what I told you, when you look at this chart, do you look at it differently? Do you see patterns or do you actually see business? Hey, an oil deal, Cisco. Hey, I drilled in Bakersfield down to 17,000 feet. I love a good oil deal. Kern County. I knew we were in trouble when the geologist couldn't find the oil well. Yeah. So my client, the Penguin, wanted to do his own deal. He decided to put $5 million into the desert in California. And the very first time we go to visit the well, the geologist he found was 80 years old, and we got lost in an oil field following him. Could not find the oil well for like an hour. We're lost in this oil field. I'm like, yeah, this deal's gonna go well. And oil's $17 a barrel. Ugh, the Penguin. There you go, Mike. We'll just do another MSTR. Hey, Peluso Trader, how you doing? Juan, how you doing? Welcome to the folks on YouTube. It's really slow. So now that you know that this is a sales chart, is business slow or is it worth putting money at risk? So I was talking to somebody before the session, And I realize I'm rambling a lot today, but I want you guys I want you guys to be smarter. I need you I need you guys to be smarter and to be shrewd and to be cagey and sneaky, right? Remember, I don't know if Raj is around. Remember how we used to have Greedy Bastard Day, right? I want you guys to be sneaky bastards going into the next year, right? Because that's how you're going to have to be if you make money, if you want to make money. How do you trade this crap, right? You can't scalp this. This is, it's unscalpable right now. So the only way to trade this thing is to position trade it. So how do you do that? Well, and the way it is right now, the sellers are lowering price, right? You can see where they've been banging away at this thing. So what you have to do is you have to build a position short, use this as your stop, and then put some bids in and cover when it goes down. Like here, if you were shorting here between 18 and 19, your stop would be 20, and then you'd bid the market at 17 and see if you could get filled. That is the only way you can trade this. You cannot scalp this market because if you're just going to be sitting in the trade forever. Right? Now, why is the market like this? Well, because we're in distribution, number one, right? So you should understand this is why I'm talking about all this crap, because we're in distribution. So you know how when we go up and go sideways, that is the same pattern here as here. Do you guys see that? There's no randomly walking around, Mike. Unfortunately. Yeah, it's business, brother. Brownie in motion. Brother, if I give you an order to sell 1,000,000 shares and you tell me brownie in motion, you're going to have a hole in the size of your head the size of my phone receiver. Oh boy. I know what you're saying. I know what you're saying. I got to give you a hard time. Listen, you've been on the street for a while. You should be able to take abuse. Okay? Anyway, it's two-sided business right now. It's always two-sided business. There is business going on, right? None of this is random. The only thing that's random is us. We are the random element. Right? People who are making markets, people who are wholesaling, they know what they're doing. Right? They're on the bid and the offer and they're pushing order flow through and they're making the spread. Okay? So there's business to be done, but for us, now, do you guys see what I'm talking about? The point I was trying to make is it's slow because we're in distribution. There's just enough buyers that we don't have to put it on sale under 14, 12, 14, right? So the only thing that we have to change, the change we're looking for is that break of 12. Do you guys understand that? Do you understand the point I was trying to make? That what you see on the 1 minute chart is the same thing on a daily chart. It's distribution, right? So the only way to trade this as a short-term trader is to build a position. Because if you're waiting for that move, you got to time the move up, you got to time the move down. You're not going to do it. You got to be sitting in the trade. But you have to sit in the trade with your risk, right? Because if you lose that seller, why would you be short? Does that make sense? Mikey, right? That's your backup. There's your seller there. That's why you can short, because they're going to push price down. Why are they going to push price down? Because they got inventory and they got to get out of it. So the seller moves from there down to there, you follow, right? Yeah, you've done this electronically for days and hours, and I mean, you write the code, so you should know, right? So as long as that seller is there, you're cool. If that seller goes away, you got to start covering quick. Like, so if you're short 22, right, and you've got buy orders down here and you're hoping for 16, 17, but you're finding bids at 18, start paying yourself. Does that make sense? Otherwise, it's either do that or not trade. So you're going to have to learn a new skill because this market is going to go between volatility and this slow crap, right? The slow crap is when nobody knows what to do and they're kind of playing chicken with each other, right? The longs are waiting. The longs are waiting for this market to come back to 35 because this structure here from 67.35 to 6,800, there is 70 points of air here. Because if that gap fills, we will be back down to 67.25 pretty quick because there is no supporting time and volume. Look at the size of this range, right? It's like it's like just a big stick. There is no meat on the bone until 67.25, 67.15. And that's not really going to hold up things for long. Most of the position is under 67.76. These, do you see this, folks? Right? If you look at it this way, check this out. Okay? Most of the position is here. Do you see how this day there's not much trading in one area? And the next day is straight up. So this is the warehouse where they load the trucks. This is the highway they take to the store. This is the store where they are distributing for profit. Do you see that, folks? Yes? No? Does it make sense? Okay. So that pattern is a pattern you are going to see. If you want to talk patterns, that is something it's a business pattern. It's not a chart pattern, right? It's a business pattern because it shows accumulation of inventory, distribution of inventory. The difference in price is profit. You will see that there it is on a daily. You can see that on a 4-hour. Same thing. Right? You can see the accumulation of inventory under 67.57. Most of it is underneath 67.09, and it's distributing between 8, 68.05, and 54 right now. Right? It's the same thing. Then you can go and see it on a 1-minute chart. Doesn't matter what time frame you're using. It's all the same business. $30-minute. Look at this. Remember this one? Right? The cost basis is under 65.94. Sell some at 66.50. It brings in buyers. Right? So you take it to a fancier store. Sell a lot here at 67.06. Brings in more buyers. Look at this distribution. We are in a massive distribution above 68.18. We yesterday found bids at 68.04. Right? Exactly, Raj. Right? So, yeah, that's what's going on. When the value area overlaps, that's when we come back to cost basis. right? So, or here, the value area of the night overlaps the day, which means it's business as usual. What you paid yesterday, you can still get those prices today. It's slow. It's slow, Alexander. There's a lot of people that are trapped short underneath 67.88, right? And we have a Fed day on next week. You know, we're a week away from a Federal Reserve um, day, so it's not. The other thing too is, let me put it to you this way, right? If you close your eyes and you pretend that, say, you made $50 million this year or $100 million bucks, and you had a good year, are you gonna do anything stupid to blow your year in the last 4 weeks, 5 weeks? Think about it. I mean, people have already made money this year, right? Not retail traders. I'm talking like real Wall Street people, right? People who run the business. They've made their money, right? Even like larger traders, retail traders, smart business people like Cisco, right? Around Thanksgiving, Cisco said, you know what? I'm going to slow it down going into the end of the year. That's a smart business decision, right? That is a smart business decision because he does not want to blow the money that he made this year, right? There is no reason for you to make crazy, stupid decisions at the end of the year if you've had a profitable year. It is counterintuitive to common sense. Right? And Santa rallies exist for one sole reason, right? You guys think it's no, it's because Wall Street people get bonused in January. So Santa rallies happen so we cretins can show returns and get higher bonuses. Exactly, Cisco. Sleeper positions? What, positions that are profitable and that are just sleeping? Is that what that is? That's an interesting thought. Make money while you sleep? I'm all for that. I'm all for that. Oh, small positions. Oh, okay. So, pretty crappy trading environment right now. Let's see later as the world wakes up. Hopefully, we get some more customers in the store. Do we have news today? What do we have for news? What's shaking in the news department? Yeah, just auto sales. Tomorrow we've got ADP employment, Thursday jobless claims, Friday personal income. And next week is FOMC. So, not much going on. Not much at all. But that's okay. It's, it. Let's see if we could take out the overnight. Oh yeah, look. Ooh, excitement. Here we go. Are you ready? Are you ready for some football? All right. Let me get busy with the lower stops. Oh, I'm excited. You can sense the excitement is in the air. Where's the next stop? Oh, there we go. All right. Ready? Here we go. There's 14. Where's my bid? Bid's still there, momentarily. Oh, this is exciting. uh, hey, listen, I've been talking straight for, you know, over half an hour. This is the most exciting thing that's happened. Right? This is I've just been seeing that the reason that I'm short biased is I've been seeing a seller. Am I short right now? No. Because my big thing in my trading now is, do we break 14? Because if we break 14, or sorry, 12, if can we break 68.12 and stay underneath it? Because if we can, then I think lower into the gap fill, and that would be a nice trade. But if we can't break 68.12, what is the point of shorting it? Hmm. Here we go. And the last time we broke 68.12 area, we came and we found bids at 68.04. Did you see that? Did you see that? Did you see what just happened? I wish I could pause this. Do you see how we got down there and the market just printed those sell orders and then popped up? If you have chart replay, you want to rewind that. You're not going to see that on a candle chart. You're not going to see that on a candle chart. That is a TPO. That's one of the things about TPO. Exactly. Through the glass. Let's see if they do it again. Let's see if that area holds. Here we go again. I think it's going to break this time. Let's see if I'm right. There, it breaks. Low's 12 and a quarter. We still haven't broken 12, right? We're knocking on it. They will huff and they will puff. Will they blow 12 down? Yeah, so if you're long, if you did a look below and fail of the previous day low and you're long 13 and a quarter, you're probably going to have some sellers right here at 15 to 16. So just make sure that you know that. There's 16. Oh, look at that. That's a healthy appetite over 16. Let's see if we can take it up to the 17s and print, right? See, look at that. That's not bad. Good call, Alexander. Good call. Up to 17, right? Not bad. Not bad. Where could you see that last bid was for? Here, Moran, on the 4-hour candle chart. I mean, on the half-hour candle. See this level here between 67.90 and 18? It's 68.04, and we did a look below and fail. What time was that? That was 5:30 in the morning on Monday, my time. And then we tagged it right before the open. See how we hit it twice? Here and here. No problem. Now, do we stay down here? Do we move this point of control down here? Or are we not down here long enough and we get back up over 18? So now at least you can see for the market to get back up, right, we're going to have to clean out the sellers here and here, right? So that's where you have resistance, right? That's where you can map out, say you were long 14 or 15 or 16, you know that you're going to have competition from other sellers between 18 and 20, right? And now if the market just rips right through there, that's giving you information. Do you see how you can use a chart intelligently where you don't have to be memorizing patterns, right? Where you can actually understand what's going on in the business and trade it accordingly without having to guess how you can manage your risk, how you can get better trade location, how you can get intelligent information about what's actually going on than just saying that it's random and speculating that nobody knows what's happening. Because I'll tell you what, the people who are making 50, 100, 200 million dollars a month, I'm telling you, they know what's happening. So if you want to even make $50 a day, you should kind of figure out at least the basics of the business. What creates the chart? What are the mechanics of order flow? Because like it or not, you guys are all order flow traders. I don't care if you're a swing trader. Everyone who trades is an order flow trader because order flow and inventory are what move the market. Make sense? Told you there'd be sellers between, 18 and 20 there. There's sellers right there. See? Now, if we accept over 18, that means the sellers have seen buyers and they're going to raise price to 19.20. That's why I went through that whole preamble talking about how you lift the offer. Because that's what's going on right now. You see it? So now you saw the theory, now you're seeing it happen. So now you can actually visualize what's happening when a market puts in a low and gets that V shape that you get. Exactly, Cisco. Exactly. Right? It's the same setup. It's the same business keeps repeating itself, right? And that's a good thing because that makes our life a little easier because otherwise it'd be hell on wheels trying to trade this thing. Right? I was talking to one of my bigger traders yesterday, and he does about 80 grand a month, sometimes 100. And and he said, I just been doing the look below and fail. Just doing exactly what you told me to, right? Hey, Funder, how you doing? Keep it simple so you guys can trade, so you can execute. Okay? Just keep it really simple. Don't let these guys con you into all sorts of like fancy BS because this is not fancy. They've made it fancy so they can keep you confused and take your money. Don't let them take your money, right? Don't, right? Just learn a little bit about this and practice one or two trades that work. You have a lot of trouble with the LBF? Okay. Well, we should talk, Moran. You were doing great before Thanksgiving, right? And then the price action changed. I remember pretty much all fall when we were on, you were doing great. Then the markets changed, right? It's been a little harder to trade. Actually, it's been a lot harder to trade. Right? What you Yeah, it's been a lot harder to trade, right? You understand, Moran, you just don't understand how to change. And that's your next step in your trader development, right? At first, you just like me, at first you couldn't get it at all. And right, and it was frustrating and horrible. And then you had a period of time where you were doing well every day, right? And then right after Labor Day, the market started to change. Right? I don't know if you guys noticed, but this is one of the hardest things for retail traders. It's hard for me as a professional to know when the agenda of the market is changing and adapt. Right? That's why I talk about all this stuff like the candles being smaller and then being larger and then this and that and all these little subtleties because you'll trade. Because I remember when Moran was doing well, every day she was like boom, boom, boom. And even last week you had a couple of good trades, right? I still remember. This was not a trade that we used the levels on, right? We did a look below and fail of the overnight of the previous day low, right? We didn't do a look below and fail of 68.08. So of course it's in the middle of this range. It's harder to trade, right? The price action changes because the agenda in the business changes. And it's very hard to track, right? It's very hard to track. And this market has been very difficult. I remember, what was it, 2 or 3 weeks ago, I was telling you guys I'm lucky if I get one or two trades in. Like, I was like, and I'm not going to lose money on purpose, so if I don't trade it, I don't trade. It's due to business reasons, Jiraj, right? It feels like gambling because you're not comfortable with the mechanics of the trade yet, Moran. But you do it, right? And you still, it feels like you're gambling, but you're not, right? It's okay. Your feelings, luckily, you can manage your feelings, right? Because you can manage your feelings with skill, right? So you just have to say to yourself, this is a skill, and tell that side of your brain to shut it off, right? I know exactly what you're going through, right? But Jiraj, yeah, macro reasons are a fancy way of saying it's business, right? We have a market, and this is why I talk about market structure all the time. We have a market, and I've been telling you guys, if you haven't watched that video, why the stock market hits new highs, right? We have a market that is concentrated in what, 10 names, right? Most of the market's money is in these big stocks. These stocks are held by people who have trillion-dollar capital budgets. Okay, so they can hold that stock for decades, and that is in fact what they're doing. So what that does is it allows a very small amount of supply to be in the system at any given time. So if you look at Apple, It's got 15, 16 billion shares in the float. It trades 40 million shares a day. So it is subject to speculative action, right? Same with ES. ES is a speculative market, right? These are all spec markets. If you didn't have speculation, you wouldn't have ranges that are 240 points in a day. That's not how investors trade, right? Investors trade in small ranges because they want to buy large positions and hold them over time. Speculators move markets back and forth to take advantage of price discrepancy. Does that make sense? So when you have those two, and in between that, you've got all other people with different sort of agendas. So when those agendas start clashing at the end of the year, right, that is for us to be cautious, right? It's the end of the year. Only take A+ setup trades, right? You could do a lot of watching, do a lot of journaling, look back upon your year. What could you improve, right? What do you have to improve? We're always working to improve, right? We always have to improve in this business. We have no choice. Otherwise, we get left behind. We have to improve. We have to adapt. This is the hardest business to make money in as a person off the street. It, it, it is the hardest business. And it's very rewarding once you get it. But man, you really, really have to pay your dues to get it, right? It's and they sell you this fake bill of goods like, oh yeah, it's easy. Yeah, here's your Ferrari, right? It's like, they make all the ads make it look so easy, right? And it's not. It's, oh my God. Yeah, the amount of work and the amount of focus. Like, you know what we're talking about, right, Jiraj? Right? And I'll use him as an example. We were talking, and I said, well, this video, I said, go back and watch the videos again. And he's like, he watched them like 5 or 6 times, and he went, holy crap, JJ, I missed so much. Because there's so many details in those videos that I talk about. You got to understand, when I make a video and I put it out for you guys, there's 34 years of like my work into these videos, right? There's 34 years of deals going bad, people stabbing each other in the back, things you notice and learn about the business, and always the hard way, right? So when I do these videos for you guys, right, I understand if you're just trading, it's like, okay, today I'm going to learn how to make banana bread. Tomorrow I'm going to learn how to trade. The next day I'm going to take tennis lessons. That's cool, right? But those of you who are serious, and I'm not saying this to toot my own horn, when you go through these videos, take some time. Go through them, stop, rewind, ask questions. Nobody ever asks me questions about the video. That's how I know they're just glossing over it, right? They're just glossing over it. And that's cool. That's your prerogative, right? This is not school where I'm berating you, right? Maybe tomorrow you'll be baking banana bread. But those of you who want to make a living at this, you better dig deep, because it's not going to get any easier going into the end of the year. These markets have been structured. Listen, and Salter, it's not just you guys. I'm going over stuff over and over and over again too. Is what did I miss? What did I miss? What did I miss? What did I miss? That's always what I'm thinking. What did I miss? What did I miss? What am I not seeing? What am I missing? right? That's how I'm looking at this when I'm like, okay, there's a seller at 19 quarter. Okay, right? So mark that down, right? We're still got that 12 bid, right? We've had that 12 bid now all through the holidays and yesterday and today. So when that 1268.12 goes, I'm expecting a gap fill because now we've got lots of inventory above 12. So the longer that we stay above 12, when it breaks, you'll get a bigger liquidation, right? Because think of this, stuff. Let me just get rid of these drawings. So if our inventory is here, the bulk of it, right? And then these days here are the days that we are on the road taking the inventory, and let's pretend this is what? Saks Fifth Avenue, okay? So here's the deal. Once we break that 12, the more people that we have trapped long over this, we're going to get. Think of this as a bucket of water, and it keeps getting filled with more and more water. When it breaks, right, you'll get that. Now, the problem is in year end, if we go sideways long enough, what happens when a market goes sideways long enough? It attracts buyers, right? And then we'll be looking for these areas here up at that 6,900 level. Does this make sense tactically? And exactly the same thing is going to happen on a 1-minute chart. So what I'm explaining here is the same kind of business that is going to happen in every time frame, right? That's why I teach people how to scalp, right? Exactly. Investors look for price stability, right? And never short a dull tape, especially in electronic trading environments, Cisco, because these algorithms, they don't have to be emotional, right? The emotions are programmed out of this, so it's very scientific, right? And that's where guys like Mikey come in with the math. That's the algorithms they stop and start to the tick. The precision is insane. It makes our job easier because we can manage our risk much better, right? Like right now, the algos are stepping in at 19 and selling the market. That is obvious. See you, Alexander. Have a good one. Right. So remember that, ladies and gentlemen. If we go sideways long enough, we will get. It's like, if you see people standing in line at the hot nightclub, everybody will start standing in line, and the people who are long here will just raise price. That's the only problem. If we don't get a break, if we don't get a break of, 12, right? That 12 area, if we don't get a break of that, that'll happen. Do I think institutional investors tend to de-risk at the end of the year? It all depends on what they're up to, BH. I've never been an institutional investor. I've always sold them stocks. I have no idea, you know, what they do at the end of the year. Now, the larger ones, of course, they're just holding positions, right? So they might trim or add or do some rebalancing or whatever they're doing, but they will look at stuff, de-risk from a point of taking on risk for sure, right? They're not going to say I have a deal and I've got 30 million shares of stock. I'm not going to go try and pitch a fund manager 3 weeks before Christmas and try and load him up on my stock because he's going to sense my desperation. Does that make sense? Like if you're an institutional investor and you're, say, managing $200 million, right? You got a small family office or a fund or something, and I'm looking to park 5 or 10 million shares of my stock at $1, right? If I go to you in December, before Christmas, before year end, and pitch the deal, right? You'll be like, oh, this guy's desperate. He needs Christmas money. If I buy $5 million or $10 million worth of stock off him, he's just going to go buy a Bentley with my money. Everybody knows that, right? So the way you would approach that is you'd say, oh, hi, you know, let's talk in the new year, right? Then the guy doesn't think you're desperate, right? See, look at this. Price stability, bringing in buyers. See, here it is. Price went stable. Buyers started lining up. They lifted the offer from 1920 up to this 22. Oh, I've gone on a little bit longer. Does that make sense? Yeah, we backfilled and inventory is short, Raj, right? So we might get that nice, interesting move back up. And remember, what's the goal? What's the goal? Same as yesterday, right? We've been underneath VWAP now all of this time. So what the goal of our market is to take this, all of this position here, and go sell it up here. Make sense? Take this, go sell it up here. Profit. Same thing. Inventory is short. Let's see if we can do that. Okay. Trade safe, everyone, and we will see you at 9. Those of you who are watching, please come visit us at the tradingsyndicate.org. We are on a mission to make you profitable, right? We just want to make you money. And we want to do it in a way that you can understand how to make money. We've built this AI trading coach, so we're trying to give people all the resources they need at a very low monthly price. So because it takes people time to learn. That's if you're wondering why we don't charge a lot for our room, it's because we understand that traders need time. And if you price gouge people, right, and charge them $200-300 a month, they're gonna tap out after like 3 or 4 months because they'll have spent a couple of $1,000s and they won't have learned anything. So if we keep the price low, right, it allows you guys the time to learn. Think about that. We do things not just for pricing, right? We do that to allow serious people the time to learn. Right. Thanks, everyone. Have a safe trading day, and we will see you at 9 o'clock Eastern Time. Bye for now.